Hey, welcome to the Forex.Today YouTube channel. It is 7:30 in the morning, New York time. It's Monday, May 6, 2019. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Let's go. Hang on, I want to do something. No, sorry, it just popped up in my brain. Cool. Okay, I just want to check. Cool. Want to check. Okay, let's go back over here. Hey, good morning. Meow ma. Nice to meet you. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Thank you very much for being here today. I suggest we cover gold and oil, dollar pairs, yen pairs, Swissy pairs. Anything else? How about whatever else you asked for? USD ZAR? Yeah, that can't be very good. Why, you think Rand is getting killed? Yeah, probably. What else is going on in the world? Trump's playing a little game theory. Apparently the media doesn't understand how that works. So what are you hearing? When you woke up this morning and saw the media, whether it was newspapers or TV or radio, did you hear like, the stock markets are plunging? Really? Yeah, down 3% is a bad day, but that's not the end of the world. So I don't think it's plunging. But anyways, hey, well, whatever. Thank you for being here. Make sure you get involved. You ask questions. You treat your other currency traders with respect, all that kind of stuff. And then, of course, please visit TradersWay.com and open an account. If you'd like these chart templates that I'm about to use, you can have them for free. So once you're done downloading MT4 from TradersWay.com, make sure you download my chart templates and you can install them. Cool. Easy peasy lemon squeezy. So let's go over here. So non-farm payrolls, red hot. Now what? What is the market actually worried about? The stock market crashing. Is it really the Trump negotiations with China? I mean, they are important, but is it worthy of crashing the market? Probably not. But what has pulled down the stock market in the past, let's say the past 3 significant moves? So we had a stock market decline of 20%. And then I think we had 2 stock market declines of 10% in the last, 5 years? What caused them? No, I wouldn't say slowing earnings. Not a 20% decline in the stock market. Sentiment? No. I mean, it creates the sentiment. No, that has to do with what we're talking about, Watson. Fear of credit dried up? No, taking profit? Well, sort of. I mean, some people are freaking out and some people are just taking profit. But what? Fear? No. Come on, guys. Give me a solid answer. Lower liquidity? No, I think we're the United States is ridiculously liquid, yeah. Taxes? No. The reduction of taxes in the United States created a stock market rally, but not a 10 or 20% decline. Uncertainty? No, there's tons of certainty. Just look at the data. I never understand when people say, well, the future's uncertain. Like, didn't you look at the data? If you look at the data and then analyze it, there's tons of certainty. Rate hikes. Thank you, Joe. Rate hikes. Interest rates going up, by definition or by design, slow the U.S. economy. No, lack of inflation. I mean, it's not deflationary anymore, KJL. It's not deflationary anymore. So even if there's 2% inflation or 1.5% inflation, that is expansionary. It's just slow. So it's not profit taking. It's not lack of growth. It's not lack of inflation. It's not uncertainty. It's not taxes. It's not fear. No. When the Fed said, we're done cutting interest rates, or we're done with QE, that was one, right? Then there was another one where they're like, we're going to start jacking up interest rates. When they actually, instead of just cutting QE and going to neutral, they actually started cutting interest rates, right? Boom, down 10%. And by the way, I think it's almost always about the same time of year, right? And then more recently, there was a fear that the Fed was going to continue, and then that quickly ended, right? Do you remember? In October, Powell was talking about, jacking it up to 10% or whatever he was talking about. He didn't say 10%, but he gave the impression he was going to keep raising interest rates, which I told you, when you get a new Fed chair, they always make mistakes in the beginning. And that's going to be his big mistake, signaling to the market that he's going to jack up interest rates indefinitely. And the market just tanked. And then he said, no, I'm not. Sorry, you misunderstood. No. I'm not going to raise interest rates forever. In fact, I might not raise interest rates at all. So that's what it was, guys. So Trump's, negotiating a deal with China. Is this really the stock market crash of 2019? This is it? Or should you be looking for 2 or 3 things you want to buy on the way down? By the way, last time I told you should be buying on the way down, and the time before I told you should be buying. I remember my buddy came over and he's like, what should I do? I'm like, do nothing. Actually, I told him to buy some European stocks. But anyways, so that's it. So just interesting. I'm not prepared to freak out, but what are sort of the other things that we know? Okay, what are some of the other things we know? There's going to be volatility between now and the June Fed meeting, and then we're going to lose volume. Volume and volatility is going to turn, right? And we also know Japanese yen is likely to be strong this time of year, right? Not for the whole thing. So I think there'll be a decline, a rally, a decline, and then the giant sucking sound of summer. So Greg, the one thing about the market is stupid, right? So will the Fed turn dovish? No, but that's what was happening 3-4 weeks ago, Greg. People were pricing in a rate cut in December, a cut in interest rates. They were pricing that in, and the recent FOMC meeting killed that idea. But let's discuss it. Why would you cut interest rates? Why would the Fed cut interest rates? One, you want to create employment, right? And two, you want asset prices to go up. Well, we're at like an all-time low in unemployment, and we're at an all-time high in the stock market. Why the hell would you cut? Think of it. You have like 3 PhDs, and you've been working your whole life at the Fed. Are you really going to cut interest rates? You're that emotional? Like, it just doesn't make any sense. None. Now, the market would like it, but that's foolish, right? So you got to be very, very, very careful. But the more you understand yourself, and then the more you understand what's going on in the market, like just you're in the market, you understand what the other people are thinking and doing, then you can analyze times when the market is wrong and you wait. Okay. Well, the market is liquid. Okay. Market is liquid. So I've never heard of anyone having problem with the lot size. Now you're saying like 20 standards, but if you're working at a bank, you're not trading a standard lot. You're not trading $100,000. That's ridiculous, right? So that would be so small. It's just stupid. Like you don't even have standard lots. A standard lot to a professional would be like a mini lot. So yeah, I've never heard, and I know I've seen people with billions in their trading account, billions. And I've never heard them say, oh my God, I can't get my trade filled. Never heard of it. Okay. Why does the summer season have so much effect on volume and volatility? Because people go on vacation. Americans take July off, Europeans take August off. That's it. By the way, I think London and Japan are closed today, right? So you're going to see some extra volatility in the futures market today. Well, Cash, you should be in the swing trading group because we covered it all. My pleasure, Nintendo. All right, guys, let's go. So you tell me, what do you know about this? What do you know about... oh, where's my drawing tool? That's weird, it went away. Hang on, let me get my drawing tool. Oh, it's way over here. Strange. If you're gonna love me, darling, my name is Wayne. All right. All right. So what do you know about this? What has Uncle Wayne taught you? Yeah, I think it's Socialist Pig Dog Day in the UK, isn't it? Frederick von Hayek Day? Okay. Counter trend, right, Joe? If anyone is taking the swing trading course, they know that for a fact. They look at that, they know exactly what to do. Done. It's about 1 millisecond worth of analysis. Back to the central, back to the central. Pivots. There's a cue up Metallica, right? Cue up Metallica. Hey, Metallica! Where's price going? Back to the central, back to the central. Pivot. Yeah. So anyways, I don't think we'll actually get there, not in a straight shot, but we do know there's a counter trend opportunity to scalp this back. Okay. Ultimately, the target's here, but that's pretty high, right? And we're not on the correct pivot for that. So I would say back to this area being a roll reversal, and notice that's the weekly CPP, weekly central pivot point. So that's the number, okay? Thanks, Joe. Back to the front. Okay. So you're not going to trade it obviously on a 4-hour. Boom, 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 boom. Boom, 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 boom. Come on, there we go. Boom, 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 boom. Okay. Skippy scalp. Skippy scalp. Okay. Skippy scalp, skippy scalp. the other thing to sort of ask yourself when you're looking at charts like this is ask yourself, are market participants respecting your pivot points? Yeah, Australia might be expecting cuts, but that's still a trade. It's a scalp, but it's still a trade. But the first thing is I always try to ask myself, what are traders doing? Are they actually trading this? Could this pair, let's say, go up, and yet no one actually is trading the Aussie yen? What if the world bought pound yen, Kiwi yen, USD yen, Euro yen? Yeah, what would happen to the Aussie yen if people did all of that? They didn't trade the Aussie yen. What would happen to the Aussie yen, guys? Yeah, Aussie yen would go up, but no one actually would be trading it, because the yen would get weak based on trading of all the other currency pairs. No one would be buying Aussie, so it wouldn't be going up. But the Japanese yen would weaken, so the Aussie yen would go up. But yet nobody on the planet is trading it. So one thing I always look for, is evidence that traders are actually trading this pair. So what kind of evidence is that? Do you think this is a coincidence? Okay. Do you think this is a coincidence? If it is, you'll say, oh, that's a coincidence. Nobody's trading this. What about these pivots here? Do you think those are coincidences? If they are a coincidence, then nobody's trading this particular pair, and you'll say, maybe I'll go find something else. But if you think traders are trading these moves, right, because they see these prices being important, right? These are the prices we think are important. If you think other people are treating them and respecting them as important prices, then we know they see them. They are trading this. You see the relevance of that kind of exercise, or at least that kind of thinking? You want to make sure you're not alone here, because we're not big enough. Okay? We're not big enough. We're not big. So we cannot move the market. So don't even try to outsmart the market. Try to understand the market. And that's what I'm trying to get to. I want you to try to understand the market, figure out the market, and do what the market wants to do, or get the heck out of the way. Capiche? So that's for you to analyze. Are these coincidences? Are these random walks down Wall Street? Or did people actually put money here? We know this is the big event, right? But then who the heck did this? Did it have anything to do with this pivot here and this pivot here? This confluence? Did it have anything to do with that confluence? What else could it be? It's right in the sweet spot. Whoop. What do you think? Coincidence? By the way, if they sold this 382 right? You expect this to head down, right? Actually, you want it to go to the 1618. We didn't actually get there. Okay, but anyways, that's what someone's plan was, right? You see that? Yeah, Chuck Duck is right. I'm not saying that they're going to warn us, but they're right in the sense that they have a history of signaling. So Governor Stevens back in the day, he would come out and say, the Aussie dollar is 92 cents right now. It's only worth 72. He'd actually say that. Boom. 2,000 pips. But we don't have the same leadership there, but that is sort of the personality of the bank. They're not likely to keep you off guard. What do you think? Is it time to go to Australia and start buying real estate? You want prices low, and you want a weak currency. Where would you go? Melbourne or Sydney? Maybe Brizzy. Look at these extreme moves. What do you think? Clear this up. Zoom in a bit. What do you think? Is this a coincidence? So if it's not coincidence, then you have to say it's purposeful. So what do those traders want to see next? They want to see this, right? Or this. And then where are bears going to challenge bulls? Oh, probably here. Okay. That's price action. That doesn't quite fit our pivot levels because our pivots say we're not going to be challenged until about here. So you're going to have to make some decisions. Okay. So if you're gonna love me, hi, my name is Wayne. All right. Oops, let's change this. What do you think of like What do you think of that? You see it? So you got to get short-term long to long-term short for that to work. Now, what do oil inventories tend to do? Because we're looking at CAD yen, so I'm thinking oil. What does oil tend to do this time of year? As far as not price, of supply. We tend to move from supply 1 to supply 2. Q1 supply, Q1 quantity 1 to quantity 2. The quantity of oil in supply tends to go up. Why? And by the way, what does that have to do with price? Okay, here's the old equilibrium price 1. Now we're at the new equilibrium price 2. So price has fallen as supply increased. Okay, now in the United States, demand for gasoline specifically, not oil, but gasoline, says people need to refineries need to buy oil to make gasoline. But they have to make it before the demand shows up. Do you understand that? Right? So this has to do with the summer driving season in the United States. Right? Where you drive from Los Angeles to your grandmother's house in Chicago, and you're going to take Route 66. Go right past Radiator Springs. Not even stop. So there's a built-in demand. So in anticipation of a demand shift to demand 2, okay, or maybe it's even higher, demand 3. But with the increase in demand, prices will go back up. So they come down. When quantity 1 goes to quantity 2, price comes down, but then demand shifts first to demand 2, so we get back to the old price, but then it shifts even higher to, right? And then we draw down the supply, and we go back to here, and now we have a shortage. So we went from prices are down to suddenly prices are back to what they were, then slightly higher prices, but then supply falls to S3, or let's say back to S1, back down to the old supply levels, but demand is still high because summer's still going, and now you get all the way to P3. So you got shifting curves and stuff like that. So supply has to increase first in anticipation of the demand. So you might see CAD weakness for a while and all that kind of stuff. But if you look at inventories, they kind of do this. They kind of, they start, let's say, in December, and they end, let's say January, and they end in December. And supplies typically kind of look like this. Okay, and this is typically, so I did 50 years of data and found that this is June 1st. That's my alpha, baby. Okay, 50 years worth of data. This is typically J1. JU1. Okay. Interesting, right? So who knows? Who knows? Maybe that's helpful, maybe not. But it's a way of looking at it. So one thing you could say is in the next, let's say this, in the next 60 days, oil goes up and CAD goes up. That's a hypothesis, right? And then what do? You back that up with trade planning and action. So you can say, well, it doesn't look good now, but on that support, I could do a counter trend trade and see if we can blow through this level. And if so, I might be golden. You see what I mean? You start threading together trades wrapped up around a hypothesis. Another hypothesis, another name for a hypothesis is bias. Okay? So right now you might just say, well, this is technically down, so I'm going to stay technically down. Yeah, that's safe. That's safe. Totally. I think using pivot points, it's going to come up to this area. So in that case, maybe it'll go more like Okay? Cool. Well, if that's your bias, set it up. If you don't know what your bias is, you're going to lose money. Sorry, old chap. Sorry, boy. Sorry. Actually, I'm not sorry. To be perfectly honest, if you don't create trade plans, I don't really care. All right, Forex.Today. If you're gonna love me, darling, you're insane. Look at this crazy guy. Man, I missed the beach. I need to go back to the beach. La 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 la. Rest my head, knowing you. Hey, what's up, baby doll? Knowing you were mine for all of time. So, how many people spent more than 10 hours working on Forex this weekend? I had 12 guests to my house, and I still spent more than 10 hours working at Harvard, on Harvard stuff. So if you spent less than 10 hours in this weekend, you're getting your ass whooped by somebody. If not me, by somebody else. I don't know how you feel about that. If someone said, dude, you're not hustling enough, you're not committed enough, you're not really in it to win it. Okay? You know what I mean? Just think about that. That's true. I think that's good advice, right? I think in this game, if you get out hustled, you're going to get whooped. Anyways. No change. I zoomed in a little too much here. Let's see if I can move this up. Okay. No net change for euro. Am I too zoomed in? Is it not updating? Just make sure. Is it not updating anymore? It's only euro. Yeah, we had this problem for a while there. Looks like it's back. Maybe it's a browser issue with the plugin. Hang on. Quick, avert your eyes. It's Microsoft. Don't look directly at it. It's Microsoft. Okay, let's try this again. Try a different browser. There, pig works. All right. Where's the zero line? So it's about neutral, but it's less bullish, less bullish, less bullish. But it's essentially neutral. But, right? But coming down more than it's been going up. So neutral, nobody really wants to buy or sell the pound right now. Let's go to Aussie. Did that change? Oh, there you go. It was a little slow. All right, Aussie, in contrast, however, here's the zero line. Heavily bearish and becoming more bearish every week. Okay? The number of bulls. Okay, let me do this in a different color, and I'll do it thinner. Okay? The number of bulls have not really changed. The number of bears are skyrocketing. So let me do it this way. See? Much more bears. Here's the number of bulls. Much more bears, not very many more bulls. And the net is, the market is net short Aussie and is getting more and more short every week. Kiwi. There we go. Kiwi. Okay, check it out. Where's the zero line? Where's the water line? Well, the water line is here, somewhere in there. Okay, that's the water line. So we were actually neutral and have consistently week over week over week become more and more bearish. So I'm looking at the net here. The net was this way. Neutral, 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 neutral. Bearish, 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 bearish. It's not very bearish, but it's becoming more and more bearish every week. Okay. And kitty cat. Kitty cat, what's going on with kitty cat? Where's the zero line? Where's the water line? So let's do that. Water line is somewhere around here. Trying to do this well. Market has been heavily bearish on this. Okay. So what's going on? Let's try to dissect this. Let's do black. Black is long. So here's the buyers. La 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 la. There's the buyers. Here's the sellers. Whoa, 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 whoa. Interesting, huh? So you're either buying it, well, buying is pretty steady, right? So you're either selling it or you're not selling it. Wait, I might have drawn the wrong line. You know what? I drew the wrong line. I'm sorry. I got it. It's hard to see on my screen. Sorry. Okay. That's bears. Now I'll go to green. And this is bulls. Okay, and then what you see here in the middle is the actual price. That's the actual market action here. So, beep. So it appears YouTube's having some trouble with their chat. I don't know why. But we covered, what, dollar pairs, yen pairs, commitment of traders report. So looks like it'll be about a 45-minute webinar today instead of an hour and a half or whatever. But if I can't see your chat, I can't really answer your questions. So we did a lot, all dollar pairs, all yen pairs, and the COT data. Not bad. So we'll call it a day because I don't even know if this is even still recording. So I guess there's a possibility I'm just talking to myself. Wouldn't be the first time. But anyways, thank you guys. Thank you for being on my team. I will see you tomorrow and the tomorrow after tomorrow and the tomorrow after tomorrow's tomorrow, so on and so forth. Peace on earth. May the pips be with you. May your profits be above average. Remember, visit Trader's Way, open up an account, download MT4. Come back here to this video. In the description below, you can download my chart templates. Do that. Also, make sure you subscribe to the Forex.Today YouTube channel so you get invited to tomorrow's webinar. Make sure you leave a like. Make sure you leave a comment. Make sure you study your charts and do your homework and plan your trades and trade your plans. So as you probably know, there's about 4,000 videos related to my work on YouTube. Feel free to watch every single one of them. See you tomorrow. Cheers.